The dollar is still strong into the middle of next year, but the United States is really going under, and the East is coming up. That means India, Singapore, China, Australia. That's where it's going to be the next 100 years.
Please join us for our next live stream Sunday, July 17th at 9 p.m. Eastern. We'll go over current events, past guests, and of course, gold and silver news. Once again, our next live stream will be Sunday, July 17th, 9 p.m. Eastern. See you then. Hello again, everyone, and welcome to another edition of Silver Bullion Television, SBTV. I'm your host, Patrick Vieira. Charles Nenner, founder and president of the Charles Nenner Research Center, joins us today. Charles has provided his independent market research to the following entities all over the world, including hedge funds, banks, brokerage firms, family offices, and individual clients. Charles also has worked for Goldman Sachs and Company in New York from 2001 to 2008, and since has initiated a system of pattern forecasting and security analysis and developed a computer program which takes many indicators into account, including Charles's use of proprietary cycle analysis. And we are delighted to have Charles Nenner join us here today for the first time. It's time to saddle up and silver up for Charles Nenner. Charles, welcome to SBTV. How are you doing?
I'm doing okay. Doing fine.
Glad to have you back, Charles. Appreciate you being here with us. Charles, you made a call back in January of 2022, earlier this year, saying you expect a lot of volatility throughout the year, throughout 2022, and advised people to get out of the equities markets. What led you to make that call?
Well, as you know, I developed already in the 80s a logarithm like computers that can think for themselves. And they take out emotions, so they see things that we as humans don't see. And they can exactly project when there's a cycle top or low, and they can project if a market goes up, how high it goes up, and how low it goes up. So this looked like I published exactly like in 2007, and that says we're going down at least 40%, but I think probably more because cycles continue down for another year. So I said this you cannot even hedge this, go to zero stocks. And we're still at zero stocks, although a couple of days ago we took a very small position in General Motors because it was down cut in half since we sold it. And because I work at institutions also, they cannot stay in cash all the time, so they have to buy something back. They have rules and regulations. They cannot be in cash all the time.
Had COVID not come into play, would your data have shown you the same outcome as far as cycles?
Yeah, if you look at the research, we were about 4 or 5 weeks also in zero stocks before COVID started. So it's maybe you know about the black swan theory that says there sometimes are occasions that you know what's not going to happen, you can't predict them. And my discussion with all these people is you cannot predict what's going to happen, but maybe you can predict when it's going to happen. So my system tells you when it's going to happen, but not what the cause is. So I didn't know what the cause would be. Could be anything. Could be a war. So it turned out to be COVID. But there was no connection between the two. We only saw that the cycle stopped and we had to go to zero stocks.
Charles, you also noted how we were seeing highs and new highs with an index such as the FTSE, among others. Yet the high-low index would be low. What was this telling you?
Well, it means that the index is supported by less and less stocks. And if you look at if you see numbers of the insider selling, you see they sold already a couple of months before the top by the end of last year. And 50% of the stocks were in a bear market. So in the NASDAQ, there were a couple of stocks like Microsoft and Netflix and Apple and Facebook that kept it up. They're like 30% of the S&P, 35%. So if you look at the indices, until it comes down, everything looks good. But the generals are still leading, but the nobody's following them anymore. And that's usually what insiders look at. So most insiders were already selling before the market topped.
You know, Charles, in this time of high inflation, low growth, and unemployment that looks to go higher, where do you see the stock market going?
Well, you know, I have a downside target of 15,000 on the Dow Jones. And if that breaks, even lower. But I tell people, you know, last time it was about 6,000. It was in the middle 90s in the time of Clinton, and we still had a nice world, so it doesn't mean the world is going under. What the reason is, We'll see. Maybe there's going to be a war. It's very probable based on my cycles, or they're going to another COVID problem, or it's just the end of the expansion. And like in the United States, they make major mistakes fighting inflation. And I don't know who is the head of the economic people over there, but they have no clue what's going on. So they might make big mistakes. So in a year, we will discuss it again why the market came down so much.
Okay, and how about the bond market? Where do you see the bond market going? Recently, we had that 2 and that 10-year inversion.
Well, we usually look at the long bond, 10-year, 30-year. We've been out already, I think, for 2 years or so when the interest rates were 1%. Another thing, there's more money lost in bonds than in stocks. It's a bigger market. And we had problems getting even our subscribers out because there had been a bull market for 40 years. So they think it will go on forever. So I wrote, if you think that inflation will be a 0.5% and interest rates will stay around 1%, I mean, you must be dreaming. You have to look into history. So I showed a long-term chart, and actually interest rates now are going up for the next 30 years.
30 years interest rates.
There's a very clear 30-year cycle, and it's just started going up, and it's up for 30 years. Inflation also going up for many, many years.
I gotta ask how I can't imagine 30 years. How is this going to how's it going to look for us?
Well, that's how it's going to look. I don't know. Look at countries like Turkey. They have 80% inflation, 90% inflation, and they had it in South America also. People go around it, but it's going to be very difficult.
We're talking here about your work. Much of your work does lead you to see cycles. Can you help us understand what are some of the cycles that you see and what causes them? And I guess the first one we'll start off with is the war cycle.
Yes, the war cycle. Let me give you just an example because otherwise it looks so theoretical. If you take a chart for the last 200 years on the Dow Jones or whatever was there before Dow Jones, you see that almost always when a year ends in a 7, there's a big market downturn. So in 2017-18 it came down. In 2007, it came down. In 1997, 98 came down. There was the currency crisis. In 87, of course, it came down. The only exception was 1929, but it came late, and that's why it's such a big crash, because the bottom had to come in time. Now, why does this happen? I wrote a whole piece about that the interpretation of facts is more important than facts. Now, let me give you an example. If you buy IBM at 100 and it goes to 150, and next week the numbers come out and numbers are great. So what are you going to do with the IBM? Well, if IBM goes up because the cycle is up, then you will hear in the newspapers IBM did great and people bought IBM. But if the numbers are great but the cycle is down, so IBM has to go down. So what the papers write, IBM did so well, investors took profit because they don't think next year will be better. So it's the interpretation of the fact. Now, a lot has to do with the sunspots, radiation of the sun that makes a magnetic field down here on Earth. And a magnetic field that influences the crystallization of water. And as you probably know, our brains are like almost 80% water. So they're very much influenced by first the ratio of the sun and then the electromagnetic field. So you think you have total free will, but you don't. It depends how high the intensity is of the sunspots. Now, if you want to check that out, it's very interesting. You go to NASA, and they always produce what the level of the sunspots is. And then you do an overlay on the Dow Jones. And then you become already a pretty good forecaster if you know where the sunspots are going. And you see it has a very high correlation with the Dow Jones. So the whole system that we have it's not based on free choice. Things don't move at random. Which is a big problem because until you can convince people they have to watch or research something for years, it says, yes, there's no way out, there's nothing you can do. I'll give you one more example. When the OPEC was very strong, in the weekend they used to have meetings, and the question was, are they going to pump more oil or less oil? You would say, well, they're going to decide, right? The interesting thing is, if I look on my cycles, if the oil price on Monday is up or down, I know what they're going to decide in the weekend. So do they have free choice or not? Becomes a very philosophical question, but you can only predict markets, according to me, if you assume there's no free choice and then start calculating how it works.
If you're enjoying this interview with Charles Nenner and I, please consider subscribing to our YouTube channel and giving us a thumbs up to let the algos know you want more content like this. And if you want to learn more about systemic wealth protection, please do visit us at www.silverbullion.com.sg. Charles, if you talk to my wife, she'll tell you my brain dried out a long time ago, though. All the water's gone. But I want to get back to that 30-year, I believe you said interest rate. Do you mean that the Fed will be kind of sort of raising rates for the next 30 years?
Well, the Fed is not so important because actually the Fed is the markets is pushing the Fed what to do. It's not that the Fed always is there, and the long rates are very important also. Yes, I think rates are going much higher. 6, 7, 8% Fed funds is very normal. If you look where the inflation is and the real interest rates, and the bonds should have a bounce in a couple of months, but longer term interest rates continue to go up.
Okay, and how about the social unrest? Are there cycles in this social unrest?
Yeah, there's a 60-year cycle, which now becomes clear because the 1960s was unrest, and now 60 years later, and 60 years before the turn of the century, there's a big social unrest cycle every 60 years. Now you could say once they said, well, because most people live an average of 60 years, so they forgot, and the new kids are making a new revolution. But these days, people live longer, so I don't know if that's still valid, but there's still the 60 days. Now, you asked me about the war cycle. So there was a special request years ago, and I started looking at wars up to the Mandarin Empire thousands of years ago, and you have longer term cycles and short term cycles. Again, if you want to check what's going on, you can Google and you see that every second decade of a new century leads to a major war. So that could be now. 100 years ago was 1918, was the First World War, continuing in the Second World War. Before that was 1850, Napoleon Wars. Before was Habsburg Wars. So if you Google that, you see that every around a little bit after the change of the century, there are major wars. Now, don't ask me why that is. The difference between me, because I'm a medical doctor and an economist, is, and this happened a lot at Goldman Sachs when I was there, if you tell a doctor, this patient has to take the red pill and have no idea how it works, I give him the red pill. An economist says, I want to know how it works, otherwise I'm not going to use it. So that's why a lot of economists don't improve, because the things that we cannot understand. And I'm not interested why it happens. I want to know what happens and when it happens. And I couldn't care less why.
Okay, are you seeing energy cycles as well? I mean, energy, natural gas, oil, things like that?
Yeah, so the oil cycle now topped probably till the end of the year. And we did a big up move in oil, and we went out of oil. And from now on, we're looking for bounces to go short. For the moment, we've seen a top.
Okay, so expecting oil to come down. How about food? Are your cycles pointing anything out with food? Would food issues maybe be a product, perhaps, of a climate cycle or a social unrest cycle?
You see, I don't know these things. I only know that we were short the grains, soybeans, corn, and wheat, and weekly cycles are still down, which is very interesting because they said wheat is going up because of the Ukraine situation, that they provide 50% of the wheat, but look how much it came down. So all these correlations don't have to be true, so I'm not listening to them.
Okay, all right. Let the numbers tell the story, I guess. Fiat currencies, they also have cycles, world reserve currencies. And we see currencies, they kind of fade away, and then a new dominant currency takes over. What causes fiat currency cycles to be born and then to die off?
Well, it's what they call the new world. It's the new world order that every so many years, and I'm talking about Professor Kondratyev, who was in Russia. He was executed, I think, in the 1920s because he published that capitalism is stronger than the communism, and he didn't like that. And there's a very long-term cycle which says that every 60, 70, 80 years, a new continent takes over. That's number one. And he proved that every civilization has an expansion of about 250 years. So if you start with the 1750s in the United States, then expansion is almost over. Almost. And there's certain things that you see coming. You see coming the civil unrest always by the end of the expansion. You see too much debt, and you see too much nonsense. And one of the interesting items is that when Rome was burning, just before it fell, the Senate had you can read it in the Latin books. They had discussions day and night if angels were masculine or feminine. And now in Congress we have discussions. What's the definition of a woman? So everything always comes back the way it was. You just have to know the history, and then you can predict what's going to happen based on what happened in the past. So the dollar is still strong into the middle of next year, but the United States is really going under, and the East is coming up. That means India, Singapore, China, Australia. That's where it's going to be the next 100 years, and Europe is going to just hang around in the middle.
Okay, I guess with U.S. heading on a downward spiral, is there anything that they can do, the people or the government, to kind of stop that downward spiral?
No, that's the interesting thing is you don't want to be first of all, you don't want to be in business when the cycle turns down, because whatever you do, like for instance, my friends who are very successful in real estate, they just happened to start just after a crash. They didn't know what they were doing, and if you start building just at the top, then you go in bankruptcy. So if you want to be a president when the cycle turns down, you can't do anything good. The last time it happened was with Carter. Whatever he did went wrong. Now Biden, whatever he does, goes wrong. So if it's based on cycles, it's not that he does it, it is that he is being elected because cycles are down. So after Carter, cycles turned up, and then was Reagan elected, and it says Reagan did a good job. No, just the cycles were up, you understand? So the cycles are the moving factor, and then we'll see what happens. And if the cycles is down, you get a bad president. And if cycles are up, you get a good president. I don't even know if Reagan was a good president, but whatever he did was successful because the cycles were up.
Charles, how much of a role does government, via fiscal policy, or central banks via monetary policy, contribute to these cycles happening over and over again?
Well, it's like you should know that the Fed is not a Freudian father figure that has independent ideas. They're part of the cycle. So if the cycle is down and markets have to crash, it means they're going to make a mistake. So you might say they decided to make a mistake, but based on cycles, I can tell you when they make a mistake. They think it's their free will, but they have to make a mistake in order that the cycles will bring down markets. So it's like in quantum physics, you got a cause and result, and they prove mathematically that you have the result before you got the cause. And in quantum physics, they say we can't understand it, but mathematically we've proven that that's how it works. So when cycles go down, anything goes wrong that can go wrong. And when cycles are up, even if things go wrong, nobody pays attention and the market goes up.
Okay, yeah, that brings up an interesting point, because we had Yellen, who said she misunderstood inflation. Then we had Paul follow up and say he didn't understand it fully as well. And both of these, they were head of the Fed. Paul, the current head of the Fed, and Yellen, she's Secretary of the Treasury, but former Fed head as well. But how is it possible that these two did not see or understand the dynamics of inflation and what we're seeing today?
Well, maybe you remember, but I don't think you're old enough, that there was a lot of inflation and a lot of fat people who made mistakes, and then came Volcker in the 80s. And they say he killed the inflation. He didn't. The two points we should remember here. First of all, it was the end of the inflation. So they could have put a monkey over there, but inflation was over. And second of all, since inflation had to be over, they had to have a respectable person of the Fed there that would make the right decision.
You talked about Biden, where there's nothing he can do that may go right. He also came out and said, regarding inflation, we are coming at it from a position of strength, and he blames Russia for inflation. Does he have a case with this?
No, because if you look at the numbers, there was already huge inflation, and oil price and gas prices were huge up before Putin started what he did to do. You just have to look at the oil price and see when Ukraine was invaded, and see that most of it was already done. So it's nothing to do with it. But, it's a nice excuse. He wants to be reelected, or he wants his people to be reelected in the midterms in November. So it says it's not our fault. It's the fault of the Russians. Most people don't buy that, because on the media they show that it has not much to do with the Russians.
Last question here. In your opinion, why are gold and silver both inflation hedges, stores of wealth? Why do we not see them moving up in price or moving up in demand?
Well, first of all, 50% of bull markets in gold and silver are in deflationary periods and 50% are inflationary periods. Since people remember the inflationary periods, they think that's when gold goes up. But if you look before that, gold went up in deflationary periods. Because if you have deflation, then where you're going to put your money? The companies make less profit. Interest rates in this case go up, so home prices is not the place to be. Bonds go down, so you go into gold and silver. Now, why doesn't it go up? First of all, cycles are not ready yet. Cycles turn up in July. In a couple of months, they turn up. If you watch our research, you see exactly when they turn up. And second of all, it means that we're going to have a little bit less inflation for the next couple of months, and the insiders know that. We also know that because we look at the Goldman Sachs commodity index, and we see it's on a sell signal. That's why you saw crude, gas, grains coming down now. So for the moment, the risk is a bit less, but all cycles bottom in November, December. And we'll see then, if we speak next year, why gold went up. But again, who cares? We want to be there. The bull market is going to continue, and we're going to do very well.
All right, Charles Nenner, before we wrap up, can you let our viewers know how they can follow you or possibly even contact you?
Yeah, they can go to charlesnenner.com, and there is a 30-day free subscription. After that, you can decide if you want to take the subscription or not. And even if you don't want to, just take a look at the work, how insiders invest. We don't invest based on what the media say or anything can happen at 11 o'clock this morning. We know in advance what's going to happen. And it's interesting to see how you calculate it.
All right, Charles Nenner, we thank you for your time, and I hope we can do this again real soon. And we'll see how the cycles turn out.
We will take a look.
That was Charles Nenner sharing his views on the cycles, the historic cycles that come and go. For more info on Charles Nenner, please visit his website, charlesnenner.com. If you like this video, please give it a thumbs up, subscribe, and share to let the algos know you want to see more of our content. Audio-only versions of this interview can be found on iTunes and Spotify.